sent me an email that sent the following. Blow off top for short-term yield, Treasury yields, the 2-year failing at 4%, VIX barely budging higher, 10-year calling BS on the 2-year. It's saying, quote unquote, the Fed ain't getting to 425 this year. This smells like a rip your face off rally brewing into after the FOMC. What led you to believe that this was about to happen?
Good, thanks for having me. I was just watching the VIX fail to confirm. Like, if we were going to have rates continue to shoot straight up, that should have been accompanied by a lot more stock market volatility than what we were seeing. Like, that pair has been working all year as being coincident with each other, and the VIX just couldn't get excited today. Then you see the 2-year yields kind of flirting with 396, 397, not really pushing through, had all the reason in the world to push through, and it didn't happen. And the 10-year gets stopped at about 3.5, which doesn't mean it's going to get stopped there forever, but 3.5 is highly significant on the 10-year Treasury. That was the high back in 2018 when the bond market basically told Trump his trade war wasn't working. That was an important level when the Fed pivoted in the fall of 2018. And that was where the 10-year Treasury got to this June, which is when the market hit its low. So these levels are really, like, you don't have to believe in them, but enough other people do that they're important to watch. So when the VIX failed to really get going today, and you started seeing, like, the large cap tech names bottoming out, et cetera, you just look at this setup. This guy's going to come in on Wednesday, tell you what you already know he's going to say. Everyone is expecting hawkishness. Everyone is expecting 75 or 100 basis points. Yardeni's saying 100 basis points. If he delivers that, the narrative is going to change to, okay, great. So another 25 in November, another 25 in December, we're probably good. Once that narrative is seized upon, people are not long enough, and I think you could have a face ripper.
The other point is, I guess this makes the point that maybe the Fed can't be as aggressive as it sounds as though it will be, or some expect it to be, and that's why the bond market is reacting in some respects to what you just said, and then the stock market follows in turn. And by the way, I was waiting for us to settle out to see if we could actually close at 3,900 on the S&P. We're at 3,899.99. I saw just for a moment there we did make it to 39. And we're still settling out. So we're like right at a technical level that a lot are watching. But in some respects, is that what this is about? The Fed is just not going to be able to be as aggressive as Jay Powell certainly sounds like he will be.
Look, I don't even think the first set of rate hikes have actually worked their way through the economy yet. But the early indications are that demand is crashing. You look at home builder sentiment. You look at existing home sales. You look at anything to do with housing. It's like heading into almost free fall at this point in time. And part of it is seasonal, I understand, but that's a really, really big and important chunk of the market. You listen to what semiconductor companies are telling you about double ordering and gluts. You look at shipping costs are falling through the floor. You look at gasoline, like all of the things that we were screaming bloody murder about, and rightfully so, in January, February, March, April, they are now directionally doing exactly what the Fed needs them to do. Whether or not the Fed did it is not the point, right? The point is where they're going. So I don't know. Look, the market doesn't believe that the Fed is getting to 4.25. That might be what their dot plot says on Wednesday, at the conclusion of this meeting. The market just doesn't believe it. Doesn't believe they'll need to, or doesn't believe they can get there without already causing a recession, which would cause rates to start falling. So that inversion, it should be on everyone's screen. That is the thing right now. Mm-hmm. So I'm not telling you the economy is bad. I'm not saying any of that. I'm saying right now the setup is that it would be very hard for the Fed to shock us to the downside.
Got you.